Okay, the election distraction is over, sorta, kinda. Let's just leave the US alone for a second. I want to jump across the pond, put up this chart, which kind of shows just how enthusiastic investors became throughout this year. The German media outfit Welt actually published a version of this chart in October. All we're looking at here is new stock investments by German savers, right? These are half yearly figures. Every bar represents 6 months. And in the first half of 2020, middle of a global pandemic, German investors pushed almost 24 billion into the stock market. And conventional analysts, they'll look at charts like this and they'll say, man, this is great news, right? Everyone's excited about stocks. They're dumping their savings. They're moving money into the market. What could be more bullish for shares? But just take a look back in time here and notice the record that was just broken, right? The old record actually came during the second half of 2007. And if you know market history, you know the German DAX peaked in July of that year. July 13, 2007, prices dipped for a few months, registered a lower high in December that year. So it's really the progression that's important here, right? Stocks peak, yet investors keep moving into the market under the belief that the old uptrend is still intact. And this is fairly typical behavior that we see in lots of other indicators. I think some version of this is playing out in the market today. And we can definitely see variations of this theme in the United States. Take a look at this chart that my colleagues put together for the financial forecast. This is just such a telling chart. It's the Dow Industrials on top. All we're looking at on the bottom is references from Google News for two terms, right? Fear of missing out and stock market. So these are all the monthly news articles that reference those two terms. If you remember, that FOMO meme really became popular back in 2018. You can see kind of that little burst of FOMO references early that year. Steve and Pete actually commented on it at the time, and the market dropped about 12% afterward. But what's important is what we're seeing today. Here's this mountain of recent FOMO references. It really makes 2018 just look like a molehill. We saw 114 references in October. That's down from 220 in June. That was a record, and both months were higher than the references that came at the Dow's February high. So in essence, there's this boom of FOMO references in the media. Investors are wildly fearful, but they are not afraid of a big market sell-off. They're afraid of missing out on another stock market advance. This is just another version of that German chart. It's classic contrary investor sentiment. And this one just shows that the psychological pressure to be in the market right now is really relentless. So that's all I wanted to show you. I just wanted to take a break from the election drama and kind of share these insights with you. These could be pretty important contrary indicators as we negotiate the wave structure in the final 2 months of the year.